Good morning, everyone, and welcome to the European crossover. We're seeing the euro recover just a little bit, and the dollar CAD recovered also from that hangman I pointed out yesterday. If you caught that, you were able to go and catch about 65. Well, actually, more than that. Let's see, 80. Yeah, about 65 pips. I tweeted out right there just shortly right after it happened, so you had a chance to at least exit out of dollar CAD long before you get a better price, or some of y'all played it from the short side. Oil's pulled back a little bit. It even got further than what I expected on this run up. I was thinking we'd get this run up, and I was sharing on the inside call that it was a little bit tricky because we actually had a buy signal on the 30 minute, but I was looking to fade against it, but it was a little bit tricky because we had a buy signal, and sure enough they did go on and go much further than what I expect. Not much further, but I'm saying it's like an extra 50 cents more than what I thought they'd go to. Not really a whole lot happening in FX other than the dollar yen is continuing to work a little bit higher. And we were talking about that, is that, 80% of those polled in the Reuters poll were looking for the BOJ to do some type of stimulative action in the near future. So it makes sense that, there'd be an underlying bid tone. If not, like I said, it didn't mean you had to go right out and buy it, but you really just didn't want to be short that market because there was going to be an underlying bid tone there. So. Spoons came back. I was talking about I did not expect to see much action below. We talked about that 2026 area. They actually, ventured, I think, 3 different times there. So there was they spent more time, but I mean, there was no real follow through. I had a level at 2250. I actually got long at 2650, and I was going to add a 2250, but I thought, well, what if the wheels fall off? I knew there'd be support at 2018, but I just didn't see it. But at least I hung on to that. But I'm well out of it. It wasn't like as if I rode it the whole way or anything like that. But we came up. I mean, I thought initially this is how I thought, not yesterday, but Wednesday would be, where they dip lower if there was no fall through, and then they zoom right back up. But they didn't zoom. I mean, they ran up, and then they came back down. Then they ran up, and then they came back down again, meaning sub 26. And then eventually things started working, better. We can see what's on tap for the day. There's been a lot of talk on the Greece issue. I could care less. I'm so sick and tired of talking and listening about Greece. I really don't care what goes on in their problems. I don't even tweet out the headlines anymore. I'm just like, I can see why the people in the UK would just want to get the F out of that union. Who wants to be part of that crap? I mean, there's been a plethora of headlines regarding Greece over the last 10 days or so. I don't even tweet any of it out. It's a joke. The whole place is a joke. And that's not even driving the euro. It's not before it was driving the euro. It's not. So we had Eurozone current account deficit. We did have German PPI, Canadian CPIs due today. All retail sales. That's going to move it around. We do have existing home sales. I already said that before. That's not going to move the market that much. It'll move the needle a little bit. Although we have rebounds, you can kind of move a little back and forth, but there's nothing else that's going to happen. I mean, if that's the story of the day, hit the alarm. Although, like I said, we've had a nice rally off of those lows, and I was saying, everybody was talking about that Head and Shoulders. It's a bunch of BS. Look, the Head and Shoulders that I talked about at 2092, they called it for 60 handles, not the one that everybody's looking at now. That it's not. I mean, I'm not saying we haven't worked lower, but they're thinking, oh, it's going to go lower. It's going to go to 18, 16, 18, 40, or whatever it's supposed to go to. I'm just not seeing that. And if you were, then we would have seen it yesterday. It gave all opportunities to go and really sell off at that point. There's really, like I said, there's no news really driving it, and we've already had the runs lower. This week I'm talking about the euro, and the euro went further than what I expected. I mean, obviously yesterday then it looked like it wanted to still go lower, so you had to figure out, how far do you think. But I mean, initially, it punched a little bit further than what I would even expected. But I guess, like I said, since we talked about that yesterday, since people just want to they want to have long dollar exposure ahead of the weekend, then they're just going to keep it lower. Just going to keep that offer tone. They just keep it on the offer. So just going, I guess, moving to the charts. So we've talked about this 12-18 being the 38%. Yeah, they punched them lower to the tune of really almost 40 pips. But you can see in the bigger scope of things, it's just kind of vacillated in this area. And of course, as I mentioned, there was an offer tone because, the people wanted, we discussed it yesterday, people wanted to have long dollar exposure ahead of the weekend. So it's, like I said, they're going to have it on the offer, but I didn't expect us to have a whole lot of follow through on this. So you can see how it just meandered about for the longest of time. Right in here. You see, it's still not even any trading. And now we're starting to see it balance up and come back up here. I mean, not really a whole lot to hang your hat on. you know, other than, like I said, we come down to 12.18 was pretty key, 12.16. And here's what I thought, like I said, I thought the only thing was is that it was obviously caught a little bit of people off guard on the FOMC. We talked about this being support, and it actually hit it to the pit. And then it turned around, and I think it right after the release of the report, I think it was traded at 12.92 or 12.95. And then we turned around and it fall apart, and that made sense. Like, okay, well, they'll take this out. Probably should maybe allow to stretch as low as 12.16, but it actually didn't get to 12.16 until here, and then it kind of just sat there. But it was traded, I think it's 12.33 or 12.32, and I mentioned it's 12.36, a good area to cover. And then we just languish here, and then, like I said, with them having that tone of being on the offer, then we gently just started working lower. Found a little bit of support and languished in here, and then we're just kind of going back to the other side. I really don't see any real news per se on this. I mean, obviously, they'll have a little bit of trouble at 12.55. I mean, if you're really apt to sell it, I'd say maybe around 12.70-ish, or definitely up to this 12.82. But I think that as we come into next week, then people are going to say, well, as I mentioned before, they would think, well, the NFP last month wasn't even that good, so you know what, maybe they're not going to go on and raise in June, and then they'll probably lighten the dollar up a little bit. I mean, overall, they'll still be selling the euro on rallies, but it'll probably lighten this downswing. Why you would look for it to move up a little bit higher. If you're lucky, maybe they might even be able to make it up to this 13.38. Then for the long haul, you can just hold them, knowing that you'll, you know, end up getting paid. The next key would be this 11.51 here. But I don't expect them to be doing that anytime soon. I don't see anything that's on the horizon that's going to run people into the dollar any faster than it already has. And that's why I thought that they kept that, the dollar had kept that bid. But at this point now, it's those that wanted to buy pretty much I would think have bought now. Well, I think I would look for the market to go in and, you know, start to work itself back up. So the next thing here is on the cable. And it never did quite make it up here to the 78%, but we've gone and pulled back. People keep getting fooled by this cable, and I just don't get it. I really don't. You know, I just don't get it. I really don't. You know that this market likes to go to extremes because of these wicks that you see here. Forget the move. Obviously, it's a big move. But I'm just saying some of these wicks really give you an indication on how this market really likes to screw a lot of people over. And somehow, some way, people keep falling for this. Honestly, I don't get it. I really don't. if you're going to trade the cable, your best chance is to trade these extremes. And you see these wicks, and they really hurt people back and forth. I was surprised we made it up to this height. I really was. I was hoping that they would make it up here to the 78%. By the time we came, we discussed it. I think it was right here. It already, I think at the time, I think we were here. So I was thinking we might take one more last hurrah up here and then fade it, but they did it already. I mean, they already started. People saw that and they took the other side of the trade, exited. I mean, we're back up here, this 45.50. This is the area I was talking about shorting on the way up. I said, there's your area here. But, you know, I said, for those that have ants in their pants, have it shorted, wait between 45.32 to 45.38. If you're that desperate to short it, but this is at 45.50. See, that's why we say it's all about the frickin' levels. So you can see here, they get right past it, and then they come back to support, and they launch, and look where they find support at, back to the 45.50. Doesn't have a damn thing to do with oscillators or monkey patterns. Has to do with these levels. You can see the significance here. Excuse me. I keep trying to tell y'all, it's all about the levels. Notice how I have this in a bold. You see how this was just regular, but that's a bold font here? It just, and I have it dotted, meaning there's some significance there. That's why on the way up I said, you know, why don't you just wait till 45.50? But if you have frickin' ants in your pants and you just can't hold it, then at least wait till 45.32 to 45.38. And then we saw the market back off 25 pips. But obviously, and I wouldn't pay attention to it later, but it turned around and reasserted itself. We got past 45.50 and some stops. We came back, found support at 45.50. Obviously, we ran up here and really ripped some people. And on the way back down, we find support at 45.50. So you're thinking, well, that was just the level that you just gave, and you just got lucky there. It's not me knowing anything. You can see here the battles at 45.50. I mean, look at that. You see? I mean, do you have frickin' rocks in your head? I mean, look, there it is. Biggest frickin' Dallas. If you want to give your money away, go ahead, give your frickin' money away. I don't give a rat's ass, but I'm just saying, it's at least trade with some doggone common sense. You can see that 45.50. So that's why I keep saying it's all about the levels. Because look, after they, you know, it looks like, you know what, you said something about 45.50. I guess I should have waited, but yeah, look, it went past it. You don't know what you're talking about. And look where it comes back for support, 45.50. I mean, it's touching it twice. See, it came off of it and rallied up. Goes back down, 45.50 again. And if you look at it, it looks like it took it out by maybe by 2 pips or something like that. See here, where it just took it out by about maybe 3 pips, another downside. Not a whole lot, but I'm just saying, that's where the support is. That's where you have to, that's where I like to have my levels up, and I like to label my levels. That way you're already prepared. I don't even trade cable. But when everybody was like, oh my goodness, it's rallying, which I thought, you know what, there was, yeah, this was support, but I thought there was still an option for this to go even lower, to take one more last dive. Although we talked about here how they were just waiting follow through. But when they took off, I don't even trade cable. I was like, okay, well, here's a level of 45.50. It went past that, but initially pulled back just a hair. I mean, it stopped before and then went through it, and then now you can see, like I said, if you may not have grabbed a whole lot, but if you got short anywhere in here, this is a decent area to go and cover if you're just day trading it. So I pointed this out yesterday, the hanging man on this dollar CAD chart. You can see right here, clear as a freaking bell. I mean, you could just maybe find a hanging man anywhere and say, okay, there's a hanging man or whatever. The significance was that it came at a key area, and I think it was like, I think somewhere here, I don't remember what fib I had here, but I'm saying is, and it was right around here. But the point is not only the fib, but look at the run that we had. You see? So you're getting, and it wasn't this fib, not this one. It was a little bit higher, but it's had a hell of a sell-off. There's no doubt about that. I'm just saying, yeah, I always tell you, you have to look at things in context. So look at this, man. What a heck of a sell-off. And that's not even all of it. You back up the truck, and you can see, look, it's from here, 46.90. But you have to look at things in context. So look at this run-up. Pretty doggone good run-up here. And you're coming into this top of the zone here. See that right here? Here I am back with my ovals. Over here, see battle. Resistance. Resistance. A battle. Another battle, and obviously when it loses a battle for the third time, the wheels fall off the caboose. This wasn't a very easy area to find. I mean, these are trying to find as many, I could see as many touches. Because you can see it went past this 31.31. And I think I tweeted this out here and I go, wow, this is a pretty good area for dollar CADs to get to. Because we were coming, and I was like, you know, that zone doesn't even look all that great. I have this other little zone up here, my mini zone, but I'm like this overall. But this is where I saw the most touches here. And the market never forgets the levels. But we got above it because crude was really, you know, taking it in the shorts at the time of the morning. That being said, when you, once again, you look at this thing in context, and it's rallied 700 pips, and then you see a hanging man here, that tells you it's trying to go to the other side. And I actually took the trade. And we got lower down here. I mean, I actually tweeted this out here. This is an area for day traders to take the profits. And then someone was asking me, and I said, you know, because crude was rallying at that point later on the day, and it got a buy signal in 30 minutes. But I said, you know, we might, because at the time when I said to cover, I think I tweeted out it was like 30.85. But I think as we got up to like, not a whole big number, but I think we got to like 30.96, 30.98 or something like that. Someone was saying, oh, well, thanks. And I think we're starting to come back down a little bit because it was The market was trading relatively quiet at that point. And I said, hey, look, if crude stays on the bid into the close, I go, you're going to probably see it work lower a little bit, but it's only going to be the scraps at that point. I don't see them making a significant move lower. And you can see here that it actually only went lower by literally about 5 pips. I was even surprised. I mean, actually, when I tweeted that out, it went lower, and actually only taken out the low by 2 pips. And I think it was only 3 pips. Eventually went to get, I think it looks like we went as low as maybe 78 or something. So it took out the low by what? 6 pips or something like that? I don't know what. Now you can see it's reasserting itself. That was my point. Even though it's a hanging man, it's still within an overall bigger move, so you just take your profits up here, or you could take a short, because I thought it was really overextended. It actually, when it got up here, it sold off, then it got back up here, sold off, they got back here one last time. Actually, I was even waiting for a move here. And I said, you know what, you better not wait any longer. You better not wait any longer. And sure enough, then we saw it go lower. Actually, initially I missed a move I was going to cover, I was trading the 6C, and I went long as, was it, I think it's 71.11? I think it's 71.11. I thought, and actually I think the low was 71.02. I thought they might break them lower, and I said, I better buy it. And I wanted to exit out on the 6C, that's the 6C. At the time it was 71.31, and it missed it by, I think, 1 pip or 2 pips. I think it was 1 pip. Then it came all the way back down till it was a negative. Then it turned around and came back up. And, I was able to go and, get out. But I mean, if you trade the spot, you really had a chance to really make the most of it here. The better trade really was the spot, because you really got paid in the spot versus the 6C. And now you can see how we probably got back up. So anybody got short here was thinking, oh, I'm going to see a big move down here. They're probably like, oh my God, why am I still short now? And it goes back to what I say, you have to look at everything within context. So yeah, it's been a hell of a move up here. And that's a hanging man. And you actually saw a very nice move of essentially 60 pips. And that's not even still on the very top. I mean, once you saw the hanging man, you're able to catch about 60 pips on here. But, once again, that hanging man, in relation to what we were allowed the market to pull back, but don't forget, this, once again, in context, is a hanging man, but within a very, very big move down. It still has room to go higher. It just gave you an opportunity to make some day trading money. And that's what I said, day traders should be exiting here, which is at 30.83. So we're going to go and take a break now, and we'll catch on a little bit. Okay, buddy, welcome back to the crossover, and like I said, we're still watching the dollar CAD on its highs. Crude, although it's rallied, it's eased off a bit from its highs. Now, the next one is pretty interesting here, and we talked about that before, which is the dollar yen. And we've referenced it, the thoughts, I would say thought process, but the idea is that most expect the BOJ to go on and do additional QE. So, or anything, something's going to go on and stimulate. So that being said, that's how we had discussed earlier in the week, is that we expected this thing to go on and go higher. Overall, I thought when the GDP came out, it might knock this out for a loop initially, but we turn around and pop right back up. But the GDP wasn't that bad after all. It wasn't good, but I mean, it just wasn't horrible. So that being said, the market still believes that with the comments you've seen out of the Bank of Japan, that they're going to go on and do what they think is best for themselves, regardless of whether they're hosting the G7/G20. They're going to do what's necessary. It's in their best interest, and most expect some action shortly thereafter. So we can take a look as to where we think the market could potentially run out of gas. Maybe not run out of gas, but where the initial target, which my thought was in here, we came up a little bit short, and I thought we'd pull back. So let's go on and take a look at this. $10.50 is actually the 78% of this move. Once again, if they do any action, they'll blow through, some prices, and these are just basically mile markers on the way up. We can see, get a bigger look on how far we think this move could go. And 1132 is going to be the 61%. This is probably where they're going to, is 1132. That makes the most sense. And that's ahead of them taking action. So this is where they'll probably want to shoot to before you see them pull back a little bit. This 1050 is here, but it's not pulling back. So you can see there's a lot of gusto behind this move. So you're not going to see any real stalling until we get around here to this 1132. That's where you're going to see the market. Chances are we'll probably make it to 1132 before they even make an announcement. So we'll probably get here, we'll probably fall back into this zone here, which is like 1155 to 1175. And then if they take action, we'll shoot up and we'll take out 1177. We'll probably shoot up to 1213. And then at that point, we'll have to see what happens. The market might have to work below it. But that makes the most sense to me. Initially, I thought that they would make it to 1055 on this first run, which is right in here. And then we pull back. But we came up a little bit short. It looks like we made it all the way up to like, 1036 or something like that. I thought we'd make it up to like somewhere in this zone here. And then from there, we pull back, and then we would reassert ourselves. Now, when they were having, before the GDP, I thought there's a chance they could come down here and immediately reverse. Well, the GDP didn't come out that bad at all. It didn't come out great, but it didn't come out that bad. They avoided a recession. So that stopped it. And even then, the market took a dip, you see here, but they quickly bought the dip up. And from there, we just started advancing. And they already expected, so that's what I'm saying, why it helps. You don't have to follow outright fundamentals, like as if it's a dirty word, but you have to know what's driving the market, what theme is driving the market. And one of the things that we talked about yesterday, and this was in here. I said that they took that Reuters poll, and that 80% of participants in the poll were expecting the BOJ to take action. So you know it's going to have an underlying bid time. You can't fight this. I mean, we'll come up to 78%. That might slow down a little bit as you go into the close, but in all likelihood, we're going to 1132. And then if the BOJ announces something, then we're probably going to go for this 1213. We can take a look at it. See how that right here? Somewhere between here is where we're running out of gas if they make an announcement. Depending on what they do. I don't know what they'll do. They keep saying there's more they can do. Apparently, every time they come up with something, they come up with something new. So they could probably, I think, this is where they'll probably make it before they make the announcement. If they make the announcement, somewhere in here is where it's going to probably slow down. Right in this little area here. There's a 6C from yesterday. I kept saying 71. I don't know why I'm saying 71, but 76 at home. I thought we were going to break that 76. I think I did say 76 somewhere. Anyway, I thought they were going to break it, then they'd come back up. But you can see here, your better play was the spot. You made more money on the spot than playing the 6C. Well, screw the 6C. The move from here, from top to bottom, was worth 70 pips. The move from here was only worth 40. That's what I'm saying. It's better off to play the spot. Because it's the dollar that was also gaining. But with the crude oil, it made more sense to play the spot than the 6C. And I played the 6C, and that would have been better just to come in on the spot. But oh well, it is what it is. Live and learn. And with the Aussie dollar, we talked about this earlier in the week, pretty much overdone here at the 72.12. And they dipped a little bit below, but it looks like the market's finally, it's stabilizing here. And I wouldn't be surprised next week to start seeing this work higher. I don't think it's going to turn around and take off like a rocket, but I think you pretty much milked this thing for all it's worth. And right now, the spoons are really quiet. We can take a look at that. They're trading dead as a frickin' doornail. Here's that 26 that we mentioned, and I just really just didn't see as having much of a downside. And we talked about that yesterday here on the webinar. I bought them in here. They dipped. I was going to add, but I decided not to in case they went to the bias, the huge bias pivot, which is 2018, but I didn't think they'd get down there. But it did surprise me that they made 3 forays down there. I mean, it looks like here's only 2, but if you look at 3, we looked at it closer. But I just didn't expect us to make more of a follow through. A lot of people are talking about head and shoulders and stuff. I mean, like I kept saying is, if you look at things in context, the issue is not with the U.S., it's with the rest of the globe. But it's going to reflect, they're going to reflect that in prices and just the way the market was set up. Plus also, if you look at the way the market acted up in here, we already talked about that. I had a limit here at 80.5, and I'll be doggone if it didn't get to, missed it by half a handle. But the thing is we come back up, and you see how it only takes it out by just a hair. You see 77.50, and then it starts to lose momentum. So they're going to really start to press it. So on the way back, we know 72's been huge. Once again, it's all about the levels. So you can see here, battle zone, battle zone, battle zone, battle zone. So when they come back up here, the peeps are just playing the percentages. They're saying, well, it looks like it's weak because it only took out this high here by about 2 handles. So they play the percentages and they sell it here and they get rewarded. And so they're saying, hey, you know what? We're just going to keep playing the percentages on any rallies. So you see how it comes back up here. Now to 67.50, they're playing the percentages. Everyone the pullback is fought back. You see here, it's like, think of it this way, it's almost like a 78%. You see what I'm saying? Look here. It takes out the high, so when it falls back, people say, you know what? This thing's done. I'm just going to play the percentages. So 72, when I just look at it overall, that's probably about a 78%, and they sell it. Look on the way back up here, from this low to 67.50, probably close to 78%, and they sell it. Pull back here, come back up to 62.5. This is probably about a 78% of this move right here. They sell it, and they just keep aggressively doing that. You just keep, like I said, you ride that pony until it won't ride no more. That's it. So that's what they're doing. You see, they pull it back, and on the sell back, this one probably wasn't quite 78%, probably closer to 61%, but they're really leaning on it here. Then, of course, everybody gets all carried away, and everything's going to hell in a handbasket. And they think we're going to get a follow-through. And I said, I just didn't see any follow-through. Didn't mean we were going to dip below. We couldn't dip below, but I'm saying it will follow through past 26. Sure enough, that's what we saw. And then we saw the market finally come back. But it did do a lot of work down here. This is going to be support. Here's this 38. So maybe they kind of try and work a little bit lower, but this is probably going to be well defended, this 38. Don't forget we don't have any real economic data, nothing to drive the market. So most of the bad news is out of the way. Anything can happen once you come into the session, but you have to look at it that way. It's like, okay, what's my game plan? There's no real economic reports out. We do have existing home sales, but that's not going to move the needle that much. New home sales would, but not existing home sales. So you say, you know what? We finally made it down here. There was no follow-through, real follow-through, past 26. They came back with a vengeance. They rallied up here to 2047. So you know what? I bet 38.25 is going to be overall support. Initially, I mean, they may try and test it, but this is probably going to hold. Doesn't mean we can't dip a little bit below it to test 36.5. But overall, this area, so this is what they'll probably do. Is they may work them a little bit lower, but there'll be a little bit of a, I wouldn't say it's not as much of a bid tone as much as an area where shorts will be trying to cover. And then we just take it into next week. And that's about it. I just don't see a lot of action happening at that point. Once again, like I said, you have to look at things in context, and that way you don't get swept with all the emotion on the way down. Everybody wanted to sell it here. Why the hell didn't y'all want to sell it up here? I didn't hear anybody clamoring about selling it up here. They sure were clamoring about selling it down here. That's what I'm saying is yesterday when we were on the webinar, I said, I just don't see, because actually it was here, and I said on the breakdown, this was on the minutes release, on the breakdown, I didn't see much follow through, and I thought 26 would be key. And there wasn't, we didn't even make it to 26, we stopped at 4:30. But yesterday I came in, I still said the same thing, I just don't see any follow through. Now, and I adjusted it because I said, hey, look, I don't see much follow through in the break of 34, and 26 is going to be huge. But on here, I said, well, now, coming into yesterday, I said, now, I don't see any follow through beyond 26. You know, we're going to really grab some, get some legs, and we didn't. But I tell you what, they really had a real tug of war down there. Hence the sharp rally that we saw at the end of the day. I think Blake should be in